Okay, so in this lesson, 3.3, we're going about transactions affecting owner's equity and asset accounts. We're going to analyze and record transactions that affect owner's equity and analyze and record sales and receipt of cash on account. So received cash from sales. So received cash from sales, $1,100. Two accounts that are affected, cash, sales. Cash is an asset, sales is a revenue owner's equity account. We received cash, so we're going to increase that asset. We have more sales, so we're going to increase our revenue account. So we record that in the T account. We debit cash, $1,100. We credit sales, $1,100. So to record in the general journal, we're going to write the date in the date column. We're going to write the title of the account debited, in this case cash, and the debit amount, $1,100 on the first line. Credit is the next line, and that's indented, so sales and credit $1,100. And the last thing we put is the source document. It was a calculator tape, so we're putting T10. All right, next one, we sold services on account. Sold services on account to Main Street Services, $500, sales invoice number 1. So what two accounts are going to be affected? Well, we sold services on account, so it's going to be accounts receivable, Main Street Services, and sales. Sales is a capital owner's revenue account. Main Street Services accounts receivable is an asset. So they owe us more money, so we're going to record a debit to accounts receivable and a credit to sales. So we're going to write the date on the date column. We're going to write the title of the account, accounts receivable, Main Street Services, and the debit amount, $500. Then we're going to indent, put the credit title, sales, the credit amount, $500. And the last thing we put is the source document. Sales invoice number 1 is abbreviated S1. We paid cash for an expense. Okay, we paid cash for communications bill, including cell phone and internet services, $80. Check number 4. So cash and communications expense. Communication expense is an owner's equity expense account. Cash is an asset. So we record a debit to communications expense for $80. Cash is credited $80. So again, we write the date. We write the debit account title, communications expense, the debit amount, $80. We indent, we write the credit amount, cash, and the credit amount, $80. Last thing we put is the source document. Check 4 is abbreviated C4. Again, we paid cash for expense. We paid cash for equipment rental, $400. Check number 5. Again, equipment rental expense is an expense account. That's going to be debited $400. Cash is decreased or credited $400. So we write the date in the date column. We write the account title of the account debited, equipment rental expense, the debit amount $400. Next line, we indent and write the credit title, cash, credit $400. And the last thing we do is we put the source document, C5. Okay, received cash on account from Main Street Services, $200. So received cash is an asset. Accounts receivable, Main Street Services is an asset. We're increasing cash. We're decreasing how much they owe us. So on our T account, we're going to debit cash $200. We're going to credit accounts receivable, Main Street Services, $200. So on our general journal, we got date, the debit title, cash, the debit amount, $200, and the accounts receivable, Main Street Services is indented, and we credit $200. And then the last thing was we record our receipt number in the source document, so R2 is placed there. All right, last one, the owner withdrew equity in the business. So we paid cash to the owner for a withdrawal of equity, $350, check number 6. So we're going to debit Michael Delgado drawing, $350. We're going to credit cash, $350. So we write the date in the date column. We write the name of the account that is debited, so in this case, Michael Delgado drawing, and a debit for $350. Next line we indent, we put the credit title, cash, the credit amount, $350. And the last thing we do is we put the source document C6 in the document number column.